Let's have a look at the top 10 trending stocks on the Robinhood platform and put them into a tier list. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it, and today we're coming at you with another tier list video. If you haven't seen one of these videos before, essentially we're going to take 10 different companies and we're going to rank them on a scale from super amazing all the way down to stay away. I haven't done one of these in a little while. I'm not sure why, but today's one is an exciting one. We're going to be using a website called Robintrack to have a look at what companies have gained the most popularity over the last week and ranking them. Now, I don't want to waste any of your time. Before we get right into the juicy information, can I please ask you to smash a like on this video, as it genuinely helps me and the channel out so much. I really would appreciate it. If you're new around here, people, hit that juicy red subscribe button, join the family. We are so close to that ever elusive 20,000 sub mark. When we get there, these hoodies, t-shirts, everything is launching. And please do drop me a comment down below. Let me know what you think about the video and any of the companies that we speak about today. Let's not waste any time though, people. Straight into the information. So guys, this is where we're going to be starting off today, okay? This page shows the stocks that have had the largest changes in popularity in the last week on the Robinhood app. So we're having a look at Apple, Microsoft, Kodak, DiamonPeak Holdings, okay? Lordstown Motors, who they are going to be acquiring, who they will be merging with. ADT, an interesting one, okay? Sorrento Therapeutics, another interesting one. AMD, Li Auto, I don't know how you want to pronounce it. Amazon and Bank of America. So I have everything ready to go, nice and handy over here. We're going to go in order of most popular and work our way down to the least popular, and we're going to be ranking them on this scale of super amazing, amazing, quite good, mid-tier, meh, or stay away. So without wasting any time, let's get straight into it. And the first company of today, the one with the most popularity change, has been Apple. Now, just yesterday I made a full video on Apple. They are one of my biggest holdings in my portfolio. I believe one of the reasons that they're getting so much extra hype now is because their earnings were absolutely incredible, and also the 4-to-1 stock split that was announced. Not too much needs to be said. They are going all the way up into super amazing for me. I absolutely love this company. I mean, on the 5-day chart, we're up nearly 17%, and this is a company with a $1.88 trillion market cap. To see that kind of a move in such a short period of time is absolutely insane. If you do want a full analysis on Apple, again, that video from yesterday is up now. But there's some companies I want to spend more time on today, so straight into the second company, we're actually having a look at Microsoft, okay? Again, it's another company that I absolutely love. It's not quite in my top 5 holdings, but it's definitely in the top 10. Microsoft has had a very good week as well, okay? We're up close to 6%, trading down 0.18% in the pre-market. It's been a good week all in all. Again, a company with a $1.61 trillion market cap. So the main reason I think for the popularity change as of this week is TikTok. At this stage, you're all probably more than likely aware that Microsoft is looking to get involved with TikTok. As of August 2nd, Microsoft to continue discussions on potential TikTok purchase in the United States. And this is coming straight from Microsoft's official Microsoft blog. Microsoft will move quickly to pursue discussions with TikTok's parent company, ByteDance, in a matter of weeks, and in any event, completing these discussions no later than September 15th. During this process, Microsoft looks forward to continuing dialogue with the United States governments, including the president. So we all know that right now Trump has a lot of concerns in regards to this Chinese company. Microsoft is trying to swoop them up in the US. The new structure would build on the experience TikTok users currently love, while adding world-class security, privacy, and digital safety precautions. Look, there is no doubt about it, guys. TikTok is the new thing. It is an absolutely massive platform at this stage, and it is loved by so many people, and it has an awful lot of potential. It will be very, very easy to monetize TikTok. All it is going to be advertising. I do believe they've already started, but I don't think they've even really began to go into how much they could potentially make. So if Microsoft can get in there and get it into the US, and keep it in the US, undoubtedly I think it's going to be a good deal for Microsoft. Microsoft would ensure that all private data of TikTok's American users is transferred to and remains in the United States. This is one of Trump's primary concerns with this Chinese-based social media company, is that they have all of these Americans' private information. He would be more than happy to have an American company have this information. So look, as of right now, it's no guarantee, but the thing is, Microsoft don't need TikTok. Even without TikTok, Microsoft is an amazing company, and for that reason, they're going straight into super amazing. Regardless of whether or not they get this deal with TikTok, it would not change my opinion on Microsoft. Okay, now, Kodak. No, I don't even need to say anything. Stay away. Stay away. No. I'm sure everybody knows what happened here. So essentially, the US government gave Kodak a $765 million loan deal, and that is what happened. Now Trump has said that the government is to review this loan deal. Pretty much overnight, they went up over 1,000%. I'm pretty much sure they were up over 1,500% at one stage, but since then, they've just came crashing back down over 55%, and I see no reason for this company to be at this price. And Kodak now is reportedly under SEC investigation after the stock price explosion. This is not something that's supposed to happen. Our company is not meant to go up 1,500% in 2 days. Kodak is so much more known for its camera related products as well than their pharmaceutical side of things. Look at the 5-year chart. I mean, it's just been going down and down absolutely horrifically, losing pretty much more than 90% of their value in less than 5 years. This should never have happened, people. This should never have happened. I don't need to say much more. For me, they're 100% a stay away. Not a chance I would touch off them. Now, DiamonPeak Holdings, okay? Lordstown Motors. That is the logo I have here. Very, very exciting company. Very exciting SPAC that is going on right now, especially since I know a lot of you guys, like me, are invested in Workhorse. And Lordstown Motors is very closely associated with Workhorse. Now, this news is brand new. I mean, only a couple of days old. I have a full video on this as well if you do want to check that out for all of the information. I can say I did personally go ahead and invest. As far as a growth stock goes, I think that this could be absolutely incredible in the long term. But in the grand scheme of things, very new company, okay? We don't have physical products yet. We do have a really accurate timeline of when we will have them. We do have 27,000 pre-orders. There is a lot going for the company, but there is a lot of uncertainties as well. I have a bias. I love EV. It is literally my favorite sector to invest in right now. I think it's the definition of disruptive innovation, and I think some of the best growth stocks we will ever see in our lifetimes will come out of EV right now. For that reason, I'm going to put them into amazing. I'd love to put them into super amazing, but there's too much risk associated. The growth prospects for this company are absolutely disgusting. Again, if you want loads of information, I have that full video on them. When this news first came out, yeah, we shot up in value a lot. I mean, 2 days up nearly 27%. It has started to give back some of that value slowly but surely. We'll see what happens. Again, I'm not short in DiamonPeak. I'm not short in Lordstown. I do plan on holding them for years and years. So it could be a bit of a bumpy ride at the start, which it generally is with these SPACs. It is what it is. I'm happy with this price. Okay, next up, ADT. So this is a relatively interesting one, okay? It is a company I'm aware of, but it's not a company I've ever done too much research in. When you look at the monthly stock chart, you see that sharp incline up over 55% in a day. It's come back a little bit since, about 5%, and it is currently trading 8.29% red in the pre-market, and the market is literally about to open in about 10 minutes. So what happened? Essentially this, okay? Shares of ADT soared on Monday after the provider of security and smart home solutions disclosed a new partnership with Alphabet's Google. So they closed up 57% after having spiked as much as 99% off the back of this news. So ADT said it would work with Google to create the next generation of smart home security offerings. Now, I do think this is absolutely amazing, and it's something that I want to see come to fruition sooner rather than later, okay? The deal will link its leading professional monitoring network and installation services with Google's AI-powered Nest line of connected home products. So obviously, for a company like ADT, who's not particularly well known, you know, they're not one of the biggest companies in the world, this is a big deal. Now, ADT on the yearly chart have actually been doing very well even before this happened, okay? They were up about 40% or so. It's been fantastic. Now, if we go to the max stock chart, we can see this company only went public around the start of 2018. And until very recently, it's been downtrending very heavily. I mean, very, very heavily. So there's a lot of competition from do-it-yourself rivals like SimpliSafe and Ring, which was acquired by Amazon. A lot of you may well be aware of that. Has taken its toll on ADT in recent years, okay? This partnership with Google could help ADT take back a market share from these formidable competitors. Now, this is a relatively tough one for me. I'll be honest, guys, I need to do a lot more research into them. I may well end up coming out with a full video on this company. For now, I'm going to be putting them right into mid-tier, okay? Because I do see potential in a company like this, most definitely. There is quite a bit of competition, and I just haven't done enough due diligence yet. It's that simple, you know? You have to know a lot about a company to give a really good analysis. So I may well end up making a full video on this company, but for now, I'll put them into mid-tier. I could briefly make an argument for both sides. But yeah, that's where I'll put them right now. Okay, Sorrento Therapeutics is just a biotech company, up nearly 100% in a matter of a couple of weeks. So of course, you already know what this is going to be in regards to. It's in regards to a cure for the bad owl virus. So there is an analyst, okay, he raised his target price from $24 to $30. Keep in mind, Right now, this is a $13.78 stock. Okay, so that's going to fill people with confidence. Okay, he's intrigued by the potential of a new rapid diagnostic test that Sorrento recently licensed from Columbia University that can reportedly detect the virus in as little as 30 minutes using saliva samples rather than unpleasant nasal swabs. Look guys, if you're on the channel, you know that I don't mess around with biotech right now. I don't play the hype, I don't buy, I don't short, I don't do anything like that. I see the appeal, loads of people make loads of money really quickly. Most of them give that value back at the snap of a fingers. I'm not playing around with it. Now, I'll always hold my hands up on the channel and say I'm not the most knowledgeable in the world when it does come to these biotech companies. I don't keep up to date with them. You don't have to understand everything. For me, I'll put them into meh. I probably would put them into stay away personally, but you know, there could be something there. But I just don't like messing with these, you know, highly volatile biotech companies. That's just me as an investor personally. You do you. We've 4 companies left, okay? First one we have is AMD, which is actually quite an interesting one right now. So on the monthly, okay, AMD up 60.5%. On the monthly chart, okay, Intel, who is one of their biggest competitors, down over 18%. When Intel goes down, AMD tends to go up. If you want to invest in AMD, okay, invest in the company. Don't invest because Intel goes down. That's my first piece of advice. The 6-month chart looks absolutely incredible. Let's keep in mind though that most of this has happened in the last, you know, month or so. 5-year chart is absolutely incredible, people, but do remember when we go to the max stock chart, it gets a lot more ugly very quickly. July 28th as well, AMD stock heads towards record high, which it has hit after beating on earnings, raising their annual forecast. They announced that they now expect 2020 revenue to grow about 32% from 2019, which for the times we live in today, regardless of what kind of company you are, that's absolutely incredible. So on the call, okay, the CEO said demand has gone up from our initial expectations, and I do think that there is room for demand to continue going up at these rates. Work from home, stay at home, etc, etc. The company sees better than expected PC sales in second half of the year, which will account for a lot of the revenue, along with continued data center growth and a ramp in game console sales. For the third quarter, AMD predicted sales of 2.45 billion to 2.65 billion, while analysts on average had forecast revenue of 2.31 billion. AMD is one that I have considered buying into for a while. Okay, I do heavily believe in them, and I do, to be honest, prefer them to Intel. I did even before the big Intel dip happened. With that being said, I do think they are quite expensive at the moment. Now, I know that me on this channel, I don't like trying to time the market, but the thing is, they don't excite me to an extent where I'm willing to pay what I believe may be overvalue. I could be wrong, and I could easily see this company hit $100 very, very soon, but it doesn't excite me enough to get involved at these prices. So for me personally, AMD is going to go into quite good. I don't think they quite hit that amazing mark. I could be proven very wrong. It would not surprise me if this does absolutely amazing things over the next few quarters. So the third last company we have is Li Auto. Okay, a lot of you guys have been asking me to cover these guys recently, and I will more than likely make a full video soon. So this is another Chinese electric car maker, and these are pretty much the first company to bring in extended range electric vehicles into China, which obviously is a big selling point. So they have started volume production of its first model, an SUV called Li 1, last year, and that it has delivered more than 10,400 of these vehicles as of June 30th. Li said it focuses on SUVs costing between $21,000 and $70,000. That's a bit of a difference, seeking to offer customers unparalleled value for money with performance, functionality and cabin space for a large premium SUV, but pricing close to compact premium SUV. So the extended range system that I was just briefly speaking about, okay, is used to extend the range of the vehicle. The system is made up of a fuel tank, a 1.2 litre 3-cylinder turbocharged engine, as well as a generator. The range extension system uses gasoline only to generate electricity. The car is still propelled by its electric motor, so it is hybrid. Now in China in particular, this extended range could make a difference, but I don't think it will be a big deal, okay? So this article here says it makes a lot of sense in China. You see, the country is densely populated and has limited EV charging facilities. As a result, most consumers simply don't have convenient access to charging infrastructure. NIO is the only Chinese company I am in at the moment, okay? You're all more than likely aware of who NIO are. I have a full video on them as well. They will literally pick your car up for you, charge it for you, and bring it back to you 15 times a month. For the large majority of people in China, that is going to suffice. I doubt anybody will use that many charges in a month in China. Now, I am a massive bull on EV in general, okay? I am actually a massive bull on EV in China in particular as well. I do have to do a whole lot more research into this company. I've only done a couple of hours at this stage. Once I have done that and I come to my full conclusion on them, I will make a full update video for you guys. Right now, I don't know enough about them, but I don't really see what gives them much of a competitive advantage. For right now, I'm going to put them into mid-tier, but again, this could be my ignorance of not having done enough due diligence yet. So don't come back to me when I make a video on them saying, You only said they were mid-tier. I'm telling you right now, I haven't done enough DD. Right, two more companies, two that you'll all be aware of. The first one is Amazon. We all know about Amazon. I love them to pieces. Another company who's in my top 3 holdings, okay? Boom, going straight up the super amazing. 6-month chart, okay? Amazon up over 55%. 5-year chart, Amazon up over 500%. Oh, what about this? Jeff Bezos sells more than $3 billion in Amazon shares. I don't care. I really don't care. I always get asked about insider trading like this. It's fine. He wants some money. The poor guy only had like $4 billion in cash. He needed to get some more. The sales were part of a pre-arranged, say it with me everybody, pre-arranged trading plan according to the filings. Pre-arranged. Amazon isn't crashing. They're not going anywhere. He still owns more than 54 million shares worth more than $170 billion. If I get any comments asking me if Jeff Bezos selling some shares worries me, oh, pre-arranged. I'm not going to say any more on Amazon. They're amazing. You should all know this. Super amazing company for me. Now, the last one, Bank of America. Actually, very interesting. Bank of America Corp. Okay, 6-month chart down 27%. Seems terrible. Really isn't for a bank stock. I mean, JPM's even down a little bit more. Okay, closer to 30%. And then if we look at the monstrosity that is Wells Fargo, they're down nearly 50%. Now, why is this getting so popular? This isn't the kind of company that Robinhood investors usually invest in. Pretty much because of Warren Buffett. He just keeps buying Bank of America. There's not much more to it, honestly. Buffett's Berkshire bought $2.07 billion of Bank of America stock since mid-July and has an 11.9% stake. Warren Buffett has always been one of the biggest bulls in the world on banks, so this isn't particularly surprising. But we all know that Warren Buffett throughout this whole period has not been buying much whatsoever. So something like this, you know, your Robinhood investors, your everyday investors, they might want to get involved in bank stocks. They might have been waiting for a reason to do so. This is their reason. Now, there is also some positive news, positive speculation even, a lot more analysts starting to become somewhat bullish on bank stocks. After the bell on Wednesday, the head of JP Morgan's corporate and investment banking division and second quarter revenues are on track to be more than 50% higher than the same period last year. Economically, a lot of places are already starting to recover. That is going to positively affect the banks. It may be a slow recovery because of interest rates. I think they're going to be fine in the long term. Bank of America on the 5-year chart was seeing, you know, it's quite choppy, but it was some really nice growth. Up pretty much 100% pre-crash, let's say. If we go to the Mac stock chart, okay, things are weird. Let's just go to the Great Recession pretty much, and they got pooped on. They got absolutely pooped on, okay, for lack of a better term. Then they went on a massive run up. I think this is why a lot of people do get excited about bank stocks now, is because they see the massive run ups that had happened in the past, but it's not gone anywhere near its previous highs. I can't say it's particularly exciting to me. At these price points, maybe a little bit, but it's nothing crazy. For me, I'd put it into mid-tier. I can see why you would want to buy. It's nothing exciting. There we have it, people. That is the 10 stocks. Now, I always like to put things in exact order. So for me, Apple would come first, then honestly Amazon, then Microsoft. There's only one in each of these. Mid-tier. Right, this mid-tier is actually really difficult. For me personally, and the kind of investor I am, I'd say the highest likelihood of me investing in any of these is going to be in Li Auto, then ADT, then Bank of America, and then these two down at the bottom. But there we have it, people. If you have watched until the end of this video, you, my friend, are a true legend, and from the bottom of my heart, I appreciate you and your support so much more than I know how to describe, so just thank you for being here. This journey we have been on YouTube is absolutely immense. The fact that we are literally this close to hitting 20,000 subscribers is blowing my mind, and I just want to say thank you. I know I say it at least twice every video, but thank you. With that being said, guys, if you're new around here, please hit that juicy red button, join the family. If you enjoyed the video, hit it a like. It's free and it helps me out so much, and please do drop me a comment down below. All those things help me out so much. I hope you all have an absolutely fantastic day. I will see you for tomorrow's videos. Peace.